I'd like to think that, but I don't think that is. But yeah, sure.
We are so glad you're here, and we're going to talk about the Fed.
We are.
Huge headlines, not just the past couple of weeks,
Right.
honestly, with the economy past couple of years.
Yeah, it's been a story for quite a while now.
So we're going to see what we know.
Yep.
More importantly, what we don't.
Can I tell you what most people think of the Fed? We hear that word and we go blah, blah, blah,
Yep.
blah, blah.
And that's what it is. If you've ever listened to them, that's exactly what it sounds like. But at the end of the day, they do make some decisions that affect every single one of us in one way or another.
Right.
So you may not need to know the in and outs, but at least understand what they're doing and how you can take advantage of it.
Yeah, this is your money, your loans.
That's exactly right.
You know?
You got it.
That's why we're all in the game.
You got it. Well, let's start out. We've got hopefully not a really difficult one to start out.
Okay.
First question.
Yes.
Who is the chairman of the Federal Reserve? Multiple choice, always. Alan Greenspan, Ben Bernanke, Tim Geithner, and Brad Huffman.
I'm going to go with Brad Huffman.
Don't go D. Yeah, you got it. It's Ben, Big Ben. So
Big Ben.
we know that much. His face is on the news a lot.
Yes.
Now
it's
into
a lovely beard.
Into the more important stuff. Let's go with true and false here.
Yes.
Interest rates, as measured by the 10-year Treasury note, which means nothing, but for the most part, it guides mortgage rates.
Right.
Hit a level this summer that we have never seen in history. True or false? A level we've never seen before.
I'm going to go with true.
It's true, believe it or not. We hit low rates. Why do we care? Mortgage rates have never been lower than they are today. So if you're a first-time home buyer or buying another home or you need to refinance, this is absolutely the best environment you can ever imagine. Bad part, if you have CDs and money markets, it's not so good for them.
Okay.
So there's some implications for your cash depending on which end of the table you're on. Another important one, interest rate related. The Fed has the power to influence interest rates, which change the prime rate. The prime rate influences things like home credit lines, credit cards, and things like that. What is the current prime rate?
Oh boy. Okay.
Multiple choice: 3 1/4, 4 1/4, 5 1/4, or 6 1/4.
I think I might be wrong about this, but
Close. 3 1/4.
it is. It's that low.
It is.
about
Again, historic is where we're at.
Yeah, where it was 4 1/4. I want to say not too long ago.
Not that long ago.
Maybe when
Actually,
we were
5 years
refinancing.
ago, it was more than double. So if you think about it, if you had a home equity line and you were, who knows what, putting addition on the house, you would be paying twice as much in interest.
Wow.
Yeah.
So again, there's a huge opportunity. Again, don't leverage the house to go out and buy a boat. But at the same time,
Sean.
it's a great chance to go
How
out.
many boats do you really need?
Yeah,
Seriously.
2 or 3 is probably enough.
Okay.
But it's a great time to take advantage of that and hopefully clean up your balance sheet. Again,
Okay.
it's cheap money right now, so
Yeah, 3
leverage it
1/4, wow.
in a smart way.
Okay.
True or false again, in addition to the Federal Reserve, Congress has the ability to adjust interest rates. True or false?
Oh, this is a tricky one. I will say, I'm not looking, Sean. I will say.
You're cheating.
I'm not cheating.
It is false. Regardless of what people may think, Congress and the President can't directly influence what the Fed does. They have complete power over monetary policy,
Okay.
which is why the Fed is so important and why geeks like me pay attention to it, because it's important to know what
However,
they're doing.
if they take Bernanke out and give him a good time at night,
Right.
and,
Yeah, maybe.
you
Now,
might be able to sway him a
now
little.
the President and the Congress will approve who gets appointed, but
Yes.
once they're in, they have to be independent, and that's important so that we have that separation of power and not being influenced by political leaders. Question number 5. If you're a saver or a borrower, you want to know what happens to interest rates.
Sure.
Well, based on the recent Fed meeting, they indicated that they wanted to keep rates low for an extended period of time. What is the timetable that they indicated? End of this year, end of 2013, mid-2014, or 2015? It's right, D. They have gone out on a limb here. This has never happened. They did this earlier in the year, but up until this point, never been done in history. They are not only are they keeping rates low for now, they're going to do it for a very long time. What does that mean to us? It means this is a perfect time if you've got some debt issues to really clean them up. You've got an opportunity to pay down debt aggressively. If you haven't refinanced, boy, you need to look at it. Even if you refinanced 6, 9, 12 months ago, it may make sense to do it again, believe it or not. And if you're really serious, maybe now you take a look at a 10 or a 15-year mortgage, because the rates are so much lower, you may be able to afford that, get that mortgage gone, and literally, in many cases, save tens of thousands of dollars in interest.
Yes, it really is kind of a full-time job, isn't it, keeping up on these finances, particularly in this environment?
It can be, but the great thing is this is an opportunity. Try to take advantage of it. Again, if you're a saver, you've got some problems. We might have some inflation issues to worry about. So as investors, this isn't going to come scot-free. There's going to be a price to pay.
Sure.
But for many people who want to take advantage, this is a great time to do that.
Tell me, Brad, as somebody in the financial industry, when you're seeing these extremes like the extension to 2015, what does that tell you as a financial planner? I mean, are you scared?
I get worried because what happens is it will create an environment where inflation will probably rise. We're probably going to see $5 a gallon gasoline at some point. Probably not in the next year or two, but within the next 5 years, I think is possible. So you have to plan accordingly. So if you're a retiree, you're going to have to think a little bit harder about what investment options that I want to go after. You can't buy the CD anymore because you can't. 1%'s not going to do it. You're going to have to think outside the box and protect yourself. Because again, if we're paying $5, $6 a gallon, or beef is twice as much, you have to plan accordingly and try to make your money adapt to that environment. So there's some work to be done, but for right now, the lesson is take advantage of what's out there and at least get that debt side of the equation in good shape.
Okay, well, we didn't do too bad there.
I feel
You did
more
very well.
Fed informed than ever
There you go.
Thank
There
We
you
did
go.
all right. We have the scores. I think we were even.
I think you might have beaten me on the one,
I don't
right?
know.
I don't know.
There we go.
There we go.
It's a tie.
It's
I
a
would say
tie.
arm wrestle maybe to see who
Oh,
ultimately
yeah,
gets-
leg wrestle.
There
I
you
think
go.
Would be good.
We'll
Okay.
Okay, we'll do that a little later in the show. Brad, stick around
Make
for
a
that.
great segment.
Thank you so much
Pleasure.
for your insight. Next on Good Day Columbus.